Welcome back to another episode of Stocklabs Market Recaps. This is for the week that ended September 10th, and it was a pretty grimy week overall. The indices made new all-time highs early in the week, but then kind of just couldn't really grasp any momentum the rest of the week, and mostly were bleeding off, throughout intraday and then especially at the back half of the week. I mean, Friday was, a solid down day. So, um, yeah, it wasn't much to be done this week. Now, from last week, kind of did think that we are going to play a little more cautious this week, just because, I said that this week was really what I was counting as the start of September trading, since the back half of the prior week didn't really count in my opinion. So I think now you're sort of seeing, a little more volatility in the market, and just seeing how different sectors and positions are getting shuffled around. And I would expect this sort of action to continue at least for a little while. Um, I know, like, the reflex thought is that everything just bounces back up, but I could see this lasting, basically the rest of September, and maybe even October too. So, I would just keep playing it tight and seeing where are sort of better spots to, add risk. You can see here this oscillator is getting close to oversold, but not really. Let me just go on 6 month. Yeah, so it's getting down into oversold territory, but it's not there yet. And this hitting oversold would be some sort of scenario where you'd be comfortable adding more risk. But for right now, you can kind of just, I think, just keep doing what you're doing, and you will be okay. So just for our weekly performance on the major indices, so oil and bonds were flat, and then everything else was basically down. So Nasdaq shed 140 bips, S&P 170, the Dow was down 2%, and gold was down over 2%, and the small caps were down almost 3%. So you can see, like, these small caps really all year since September, they haven't had, um, you know, as an index, if you call the Russell 2000 an index, um, it's really giving you nothing but volatility. So, which is good for trading, but um, you know, might make you a little seasick if you're just holding and watching it. Okay, so for our mega caps, same thing. Let's check our weekly performance. And overall, as a group, down 80 bips. So, kind of outperformed the market, which has been a trend for a while. And Netflix was up decent. I think it's near 600, so it's like near all time highs, or maybe it is all time highs. Facebook up a little bit, Tesla flat, Amazon flat, and then Microsoft, Google, and Apple down in line or worse than. Actually, they're all worse than the Nasdaq. I mean, the Nasdaq was down 140. These are all down, 200 or more, almost 200 for Microsoft. Apple got hit hard on Friday, and I think it was something to do with a court ruling on their app store or whatever. So, I don't know if that'll stick, but that's just what it was at the end of the week. Let me just go to our market cap screener. Okay, so 1 to 5 billion down 2.5%. That's sort of in line with IWM. And then mid caps down 2%, a little more. And large caps down 2%. So we got like 2% across the board here. 50 to 100 billion down 170. So that's sort of close to, actually, that's what the S&P was down, right? And Terra caps down 175 bips, so in line with the S&P. And so pretty broad selling. Not a whole lot to be gleaned from this. There wasn't like you were better off, in larger caps versus smaller. I mean, the smaller caps were a little worse, but just overall, everything got chopped 2% is what it sort of looks like. So for our industries, yeah, so this matches up. I mean, we've got, just broad selling across the board is the only way you can really describe it. And our best subsector was nuclear. I mean, I've been seeing some stuff on nuclear popping up in the news, but I'm not paying attention to it. It's kind of a niche thing. But yeah, look at this. I mean, there's only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's only 11 subsectors that are even green, and most of them are barely above flat. So, I mean, everything was getting dumped. There was nowhere really to hide. Yeah, so tech 2.4, services 2.2, industrials 2.8, healthcare 2.6, yeah, 2.4 for consumer, 2.5 for materials, financials down 1%, but financials have been, they did quote unquote better this week, but they've been, I think, sort of flatlining for several weeks. So, yeah, and even utilities down 2% in a risk off week, which is, you don't see that often. And our worst sectors, okay, so silver got smoked again. I mean, this is like every other week. The silver's on here as like a worst performing sector, but people love it. Cannabis down 6%. What else? Okay, gold down 5% too. Alternative energy down 4%. That's decent. Well, decently bad. And yeah, the rest. I mean, everything. Let's see. 3.8. 3. How many do we have down? 3 or more. So 51, 2, 3, 4, 5, 6, 7, 8. So 58 subsectors down at least 3%, which is, yeah, pretty broad. And the selling was steady throughout the week. It's not like it was like one day that the market got sort of smoked. I mean, it was down bigger on Friday, but really all week it was just sort of bleeding off. So yeah, I mean, you can see it's sort of like a de-risking mode right now. I'm just going to go to intelligence and see what we've got here. Okay, so tech intelligence is looking for bounces in tech and consumer discretionary, which are, I mean, leading sectors long term for the market. I mean, really since going back over a decade. I think they're the top two. They're the top two sectors that you could be in as far as outperformance goes since 2009 or whatever. And we've got energy. We've got Latin America. I think this popped up some other week too, but I forget. I didn't really follow what happened with it. Small cap momentum, interesting, and S&P decent bounce, and emerging markets. So this is like pretty broad stuff, and generally this is sort of what you want to see as far as intelligence goes. It's picked out a handful of sectors, and they're also sort of like leading sectors. Like, okay, um, it says they're going to bounce here, and um, if they bounce, then good, everything's still back on trend, and whatever. But if not, and these signals sort of start failing, then we're probably having bigger problems that we'll just have to work through. Just let me invert this. Oh, less than. Okay. TPGY, don't know what that is, and SPXU. So short S&P is rated as bearish, which is bullish. It's the same thing as SSO being rated as bullish. So yeah, I mean, I think maybe you get a little bit of a bounce, but personally, I'm not really that confident in it. I think that this is more. I think this is maybe a little bit more of a trendier move. So could be that we're just getting started on the selling or whatever. Although if this hits oversold, then I mean I wouldn't worry about it. Just buy some stocks, get long or whatever, and you should be fine. We do have option expiration this week for September, and I think I mentioned this last month around around the same event. We've been getting lows in the market get put in the week of option expiration. So that's one thing that you might be looking for as far as something that would be a setup where you would say, okay, it's not different this time. It's the same as it's been every month, almost this year. And, that could very well play out as well. But, sort of, this is a time of year, everyone's back from summer vacation. We're after Labor Day. We're getting ready for the end of the year. And, I think you can expect different things to happen from now till the end of the year than happen over the summer months, which usually you can discount as far as how much weight you put on them with, price action wise or anything like that. At least I do. Generally the beginning of the year and the end of the year are more important for the most part than the summer months or the middle of the year. That's just, I don't know. Maybe it's just the way that I interpret stuff, but yeah, sometimes it's kept me out of trouble, and whatever, it's worked so far. So yeah, I mean, I would play it close to the vest this week still, unless you get something a little more clear cut. But for now, I mean, this is sort of just nasty action that you may just want to not participate in for a little while, which is a tough thing to do, but sometimes it's what's called for. So good luck out there this week, and we'll catch you another time.